Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Friday, it's the 1st of December. My name is Russell Shaw, I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. And of course, if you need to contact me, you'll use that email address. I'll just go through to the disclaimers. We've got a high risk investment warning on. I'm going to just keep this on screen for a few moments. Good morning, David. It's a pleasure to have you on the webinar. Hello, Mia. Thank you very much for signing in. Hey, James. Good day to you and welcome. Just keeping this high risk investment warning on for a few moments this morning. Hey, Raj. Good day to you. All right, here's our market commentaries disclaimer. I'll just keep this on screen for a few moments as well. Okay, and our references, MarketScope 2.0 and TradingView.com. Hey, Kim, good morning. Welcome. All right, let's go through to TradingView. There was the core PCE, which was released yesterday. I think it's worth our while just taking a look at how it's tracking. And it's moved to 3.5%. I've got the target here of 2%. It's actually 2% on a headline basis, but we'll just keep it at 2% on the core here, just to indicate we are moving in that direction. Another thing is worth pointing out, if you take a look at the trend lines are effectively, they don't determine trend. A lot of people use them to determine trend. That's not what trend lines are used for. They're actually used for as momentum indicators, momentum markers. And you've got to use, if you're going to do that, you should be on a logarithmic scale. And you can see that we've got a shift from this green trend line to this orange trend line. We just need peaks and troughs to kind of indicate those. There's no real peak here, so this is sort of a cheat. But if I sort of mark this trend line as a thick red line, I'm going to take it out because it's not quite accurate. But you can see that we have accelerated to the downside in terms of the disinflation. It's not sticky per se. There is some push down, and then what we can do here is we can just take a look at the rate of change, and you can see the rate of change sort of has shown acceleration to the downside, right? So by and large, I think it's a good looking number. Disinflation certainly taking place, and as long as we see that disinflation heading towards 2%, I think that is good, but we've got to watch the other macroeconomic indicators. We've got to watch growth. Is growth going to be subdued now? Is spending, retail spending, going to be subdued? So is the consumer starting to be affected? All of that, I think, is key themes that have to be monitored in 2024. Something that we can just take a look at is the median CPR. Let's just take a look at that. It's not really part of PCE, it's part of CPR, but we'll just go median inflation. There it is. Okay, and it's also it's coming down quite steadily. It's coming down quite steadily, and you know, the rate of change showing some nice deceleration there as well. So by and large, we are moving towards that 2%. What would be, I think, a negative development would be if we kind of flatten out here. Okay, we want to keep it quite steep. Okay, so we'll just have to keep looking at that. All right, let's take a look and see how the real rate has behaved subsequent to that PCE. So we'll go through US 10-year, right? Take out break even. All right, a couple of adjustments here. Because this is a percentage scale, we can take it off logarithmic, just make it regular. Let's go through to the daily. And of course, let's just change this to candlesticks. Right. Again, looking at this topping pattern, I think that it makes sense given the pattern that we're seeing in inflation, sort of that rolling over. The question, of course, is do we break through the neckline or not? Yesterday, there was a fairly strong, robust real rate movement up. Let's just take a look at the US dollar, because remember yesterday we're talking about an orderly trend in the US dollar. We want to just see if that's maintaining. So just go through there. US dollar. Okay, and you can see as the real rate picked up yesterday, so did the US dollar. But we do have some moderation in that inflation. It's coming down nicely. So I think that does put some sort of cap on just how high the real rate can go. We do have important calendar events today. You've got Fed Chair Jerome Powell speaking. He's speaking twice. The first calendar event is at 6 p.m. ZA, which would be 4 p.m. UK, and that's a fireside chat at Spelman College in Atlanta, and the title is Navigating Pathways to Economic Mobility. And then 3 hours later, he's going to have a roundtable discussion at Spelman College. So that's potentially, I think, quite influential, and we'll see how the real rate reacts to that. Let's go through to the market scope main layout. And yesterday, so here we're looking at the daily. We said here's the orderly evolution: lower peak, lower trough, lower peak, lower trough, lower peak, lower trough. I put an LT question mark yesterday because we didn't have a reference candle here. We can change that. That's now certainly a lower trough. Okay, so let's put that in. And now the question is, do we have a lower peak here? We'll just have to continue watching. But again, this to me looks as if there is a correction in a trend. It looks as if there is a rally in a downtrend. That to me suggests there may be some sort of exploitable opportunity here. Let's take a look and see if that is in fact the case. Okay, so what we'll do is just point out that we are in a negative momentum environment. Let's go through to the hourly chart here. And this is going to be interesting just to see how it develops. We're in no man's land at the moment with the US dollar. What do I mean we're in no man's land? Well, you can see that the stochastic is just slap bang at 50. Now, what we want to do is we want to just monitor if the stochastic drifts higher. Okay, if it drifts higher towards that upper quintile. If it drifts higher, then we would get some angle and separation on the EMAs. That would be contra trend. That would be contra trend. What would be more useful, in my opinion, is if we get a cross down here in the dollar. So if we get the green EMA dropping below the orange EMA and there's some angle and separation to the downside, if we get the stochastic crossing downwards and moving through to the lower quintile, that would be sort of more in line with the longer term trend. The longer term trend, you can see, is we're in zone 3 between the lower blue, the lower red. There's an orderly trend down. Even if we go through to the weekly chart, okay, we are below that 30-week exponential moving average, that 30-week exponential moving average pointing down. The RSI breaking below this trend line. There has been no doubt some support coming in for the US dollar, but that in of itself is exactly the part which we're hoping can be exploited, right? In other words, do we get the push down? Do we get the push down or not? You can see perhaps sort of the 1, 2, 2, 3, and then potentially the 1, 2. But in order for that to happen, we just need to not make the prediction. Okay, I don't know if we're going to head down. My preference would be for the dollar to move down. We focus more on the reaction. So we want to see the technical indicators starting to move. All right. Anything else we can see here? Well, we can put a sort of a resistance here. If we take out that resistance, then we're certainly heading in the wrong direction, and then the focus should move through to R1. Okay, and if we are on the R1 level, we can just see. Let's see. There we go. R1 level, I think, would be a really difficult level for the US dollar to overcome, unless those real rates push up, and that would be very much based on Chairman Powell's talking. But it looks to me as if the FOMC is slowly moving away from that hawkish bias. All right, so let's just see if we get the cooperation from the market here. So what about market cooperating with us? All right. I was dropped off the webinar yesterday when we were doing the DAX. So I want to just go through to the DAX now and take a look at DAX. And let's just do some analysis there. Okay, just bear with me. I'm just bringing up DAX. All right. Let's do a top down. DAX has been doing really well this week. We are above that 30-week exponential moving average. We are above the 50 line, so there does seem to be an underlying bullish momentum. What's the problem with the DAX? Go through to the daily chart, and I think that the DAX here is just setting itself up for some sort of correction. We're very overbought here, and whilst there has been certainly some buying into December, as we sort of approached the end of November, I think that there needs to be some sort of profit taking here just to get the froth off. And if we get that froth off, it actually sets up the leg for the next bullish leg. Okay, what's going to be interesting though, now this is where it's becomes very interesting indeed, is that if we are getting a pullback on the risk markets, then I think the US dollar probably does receive some flows. And if the US dollar does receive some flows, we move towards this R1 level. So in other words, a movement to R1, I think would see the DAX actually starting to normalize. By and large, I think that's all healthy, setting up for perhaps if we do make it all the way to R1, then we get the next leg. Okay. Similarly, if we go back through to DAX, okay, then what we may see here is some sort of correction down, say to the S1 level there. That helps relieve some of the froth, and then the movement back. This pattern here on the hourly, it looks almost like a wedge-like pattern, doesn't it? Sort of a wedge top, kind of little bit of a movement above. It looks at, and if we get a wedge, it usually breaks to the sort of opposite side to the wedges, to the way the wedge is pointing. So whilst I think that the ultimate trend for the dollar is downwards, suggesting that perhaps there is a momentum to the upside, potential momentum to the upside for the risk markets. Near term, it looks as if we do need some sort of correction there just to get that froth out of the market. So that's going to be very interesting to see indeed. All right, let me just see if there's any yeah, so all these announcements is what makes Forex trading so difficult. Indeed, the calendar is chock-a-block, so to speak. I think, Kim, the way through that is to try and get a general theme in terms of, is interest rates moving up? Is interest rates moving down? What is the market? What's the market expectations? So in this particular time, the expectations is for rates to moderate. So if we get some sort of clue from the, if we get some sort of clue from the, if we get some sort of clue from Jerome Powell, that helps as well. All right, Raz just saying, is there a divergence here? Yes. Answer that is yes. And this is a good sort of observation. Sorry, is the sound back now? I accidentally hit the mute button. Okay, sorry about that. Okay, so yeah, there was a divergence, Raj, and I was just saying when George Lane derived his stochastic, the primary signal that he looked for was the divergence. So good there on you, good on you there. All right, let's just take a look at the. It's not quite as overbought as the DAX. I think the DAX is looking very frothy indeed. I think there's going to be some sort of profit take. The longer it stays overbought, the worse the correction is going to be. It's interesting that the S&P 500 has shown some sort of moderation. So there's a little bit of ambiguity just coming in between DAX and S&P 500. I just wonder if we take a look at 30, which is sort of an industrial index, if there is some signs of being overbought there. Let's just take a quick look. Yeah, you see the US 30 is very overbought. So the industrials are looking very frothy at the moment. So I think there has to be some sort of correction. I think that correction is going to be healthy. Just be careful of that. So the markets are looking positive, but I think that the risk markets can break suddenly, break to the downside suddenly. So just be careful there. So we've got zone 1, but I would be very cognizant of this R1 level. Okay, so some sort of movement back here, I think actually takes heat out. So risk markets to me looking like a correction is imminent. If a correction is imminent, I think the dollar does get a bid, okay? But I think that's just the ebb and flow of the markets. I think that's just the normal ebb and flow of the markets. Okay, we'll take a look at gold as well. And if the dollar is going to get some bid to the upside, then I think gold likely to some profits to be taken off here. Okay, so you can see that it's starting to show some sort of downside. So I think that the US dollar, okay, probably does have some short-term support here, subject to correction, given that the risk markets are showing so much froth, especially on the industrial side of the market. All right, let us conclude at this point. If there's any questions, please go ahead and type those in. Just be aware, 6 p.m. and 9 p.m. ZA, which would be 4 p.m., 7 p.m. UK, Fed Chair Powell is going to be speaking. All right, let's wrap up here. I want to wish you guys a good weekend ahead, and we shall chat Monday morning. Thanks very much, guys. Keep well.